Morning, everybody. Happy New Year. Ready to get back to regular work schedule after the holidays here. Let's take a look at this basket this morning. So, because I was glancing around earlier and I thought I saw something that looked okay. We're going to use the RW coefficient once again, and notice these two products have a great correlation and a great RW coefficient, almost perfect RW coefficient. The standard deviation is not quite out to the second level, but I think let's take a look at this one. I was glancing at it earlier. So we can see that last year, well, not last year now, the year before last now, there was a gap here, but since that time, if we kind of look from here over, this has been a very well behaved pair, which is in line with the correlation RW coefficient numbers. It almost got to the second standard deviation a couple of times and moved very nicely and quickly back to the mean in both times. Once it crossed the second standard deviation and also moved back to the mean very nicely. So I like this pattern. It's almost once again to the second standard deviation here. So this looks very good, and the first passage time density is suggesting a very quick return to the mean. So the numbers on this look good, and the picture looks good here to me. So let's take a look at it as a pair itself. Yeah, and it's already taken a little downtick, looks like on Monday already. So this one looks very good to me. Let's go take a look for a moment here at the fundamentals. We manufacture Gildan Activewear, manufactures and markets branded basic activewear. Sells products principally wholesale in printed activewear segment. Okay. And HBI, interesting. They're both clearly manufacturing clothing manufacturers, but these guys are primarily underwear, t-shirts, socks. I guess the other guys are making t-shirts as well, although printed t-shirts. Sweatshirts probably fall in that same category as well. So they have some, I mean, they're both clothing manufacturers and certainly some crossover on the imprinted side. Okay, well the correlation's awesome, and the RW coefficient is also quite powerful. So let's go take a look quickly at the hitting probabilities here. So what did we say? We were expecting, okay, so the mean right now is at about 20 cents. That's at 238. The drift is tiny, a third of a penny. So and it's going to be a quick return. So probably not a big difference there. Let's just go ahead and put 20 cents in and see what this thing says. So it's currently at 216, and we're going to target to 20 cents. And let's give it 14 days here. See what happens. Yeah, the mode says it's 6 days. So to get to 20 cents, this thing is thinking a very quick return. So we're at about 216, and we're thinking it's going to come back down. Notice that in 14 days, it's got a fairly wide range here of numbers. But I think that having touched it at some point, I think it's pretty okay. Let's say 80% of the time. See what this thing says. That's interesting that there are some scenarios where it doesn't come back according to this for some period. But 50% of the time we're going to hit it in 18 days or less. What was the earnings? The earnings February 8th. So we got 5 weeks. We have 5 weeks on this one. It looks like a very strong pair to me. I'm going to go ahead and put this one on. I'm going to watch it just to see how it opens at the beginning, and if it starts coming in at all, I'm going to go ahead and put it on today. Just for food for thought, one pair that we were looking at from the recommendation for the 27th was to watch this particular pair. It's had a couple of down days in a row now after a little move up, so even though the trend indicator hasn't gone all the way red yet, it will shortly. Once again, I'm just going to take a peek at this at the open, and if it's moving down, I will go ahead and put this trade on today. So, okay, once again, today's trade is here. Today's recommendation to watch is GIL minus 0.96 of HBI. Good luck with your trading today. Thanks. Bye.